Hey everyone, welcome back to another episode of AWM Insights, and we're happy to report we are officially back. This past week's episode wasn't just a little teaser. We're gonna get this back on the calendar on a weekly basis to keep you informed, answer questions, and just overall give our perspective on what's going on in the markets. So if you do have any questions, definitely reach out to us. We want to make sure you stay informed and hopefully slightly entertained. You've got two CFAs here, so we'll do our best. You know, we're not necessarily the most jovial folks out there, but we will do our best. Like I said, we're recording on Friday, April 11th. It has been a wild week. If you haven't been paying attention, probably a good thing. Hopefully you've just had your head in the sand or on vacation or focused on the season. That would be a great plan of attack. It's been a wild one. There's been days both positive and negative that are really for the record books in a sense. And we're gonna kick it off today, just going back to some of the great old tenets of portfolio management, of the concepts around controlling what you can control, giving you just a little bit more color on how we think about managing through these volatile times. So Mina, why don't you take it away? Give us a sense. What does it mean to control what we can control in times like this?
Yeah, and with markets moving as quickly as they're moving, there's little you can do in terms of reacting. So preparation really is the start. We talked about this last week, but when we actually started this week, we did a pretty substantial review, and our client portfolios are prepared. They're positioned accordingly, and these moves didn't harm our clients from the standpoint of short-term spending needs or money that's actually needed now. So that money, the protective reserve strategy, has been very useful and kind for our clients, and we're prepared to ride out storms. This has definitely been a significant storm, but we've made it past it. And Wednesday was kind of a historic market rally day. So we did a lot of things on Monday and Tuesday, including a lot of tax loss harvesting. That's one thing that you can do during down markets.
Which, real quick, for those of you who don't know that term, right? It's selling a position, harvesting the loss, hence tax loss harvesting. You get that for tax purposes, but then you're buying something very similar, so your investment exposure essentially remains the same. And it's very, I wouldn't say common practice. If you're not doing that, you definitely should have someone doing that for you within your portfolio, because it does add substantial long-term value.
Absolutely, yeah. Some of our clients had positions sold on Monday and Tuesday, and on Wednesday they rallied 10%. So pretty substantial losses realized. And then some unrealized gains, which we do like to see in portfolios. And then really the last thing is, in terms of our baseball clients' in-season flows, really our clients are getting paid at a great time. Markets are down, valuations are down. You have consistent inflows. When you do have consistent inflows, you can invest at these new lower valuations, and you can really pad your portfolio for the recovery that ideally is to come.
That's awesome. All right, we get to work on our game a little bit, our stat game. We're CFAs. We love numbers. Go through it. We've talked about this week being one for the ages. You kind of alluded to it. Let's just unpack a couple of the big numbers that we've seen here. Again, both good and bad.
Yeah, I think one of the most interesting numbers is this Wednesday, I should say, after tariffs were paused, it was the 8th largest percentage day gain by the S&P 500. It was up 9.5 a little bit.
In the history of the
S&P 500.
To be clear, that's wild.
So yeah, more than 100 years of data. It was the 8th best day. And yeah, think about how many days are in 100 years, a lot. So yeah, very, very large move. We talked about this a little bit before. It was the largest point gain. I think we saw a lot of reports on that. That doesn't mean much because the index continues to move up, but I guess you can say it was historic from the standpoint of points, most points gained in one day. But want to really refocus, I guess, the significance of that one day around this really interesting point that we found during one of our due diligence processes. If you look at the S&P's average return over the last 10 years, it returned 12% on average. If you remove the 10 best trading days from every single year, your return is negative 10%.
It's amazing.
So not only did those 10 days account for all of the gain, but they actually made up for 10% of the losses as well. So really, I think the lesson here is it is so important to stay invested, to ride out these storms.
100%.
To not get cold feet and on Tuesday, morning, sell out of the market and then miss the rally that really would solidify losses and prevent you from making your money back.
Yeah, it's huge. And, I kind of jokingly said, let's work on our stat game. But your last point is incredibly important. We have these principles: stay disciplined, stay focused on the long term, don't try to time the market, et cetera, et cetera. And I think maybe I'm making an assumption here, but sometimes those can just sound like sound bites coming from us. However, they are always rooted in some form of rigorous data. And this is a perfect example of that, right? We don't just say, stay disciplined. We don't just say, focus on the long term. We say that because it actually has very strong data to back it up. And I think that's a great, great takeaway. We're going to wrap here and just really want to level set, quite honestly, that I think more volatility is expected. There's a lot of uncertainty. We are not out of the woods with respect to this tariff war. We don't know what's going to come out of it. We don't know if it's going to be solved on Monday and markets will rally further, or this could be long and drawn out events and negotiations. The portfolios we build are prepared for that uncertainty and that volatility. But I would expect it. I really would. Hopefully, we're pleasantly surprised, and that's not the case. But given that expectation, it's just a great reminder to tune out the noise. Like Mina said, the headlines are highlighting that we had the greatest point rally in S&P history. That doesn't matter. The percentage is what matters. So there's a lot of headlines that we're going to see throughout this period of time, and all they are trying to do are get you to click on it and capture your eyeballs. They are not trying to keep you invested for the long term and there to stand by your side over that period of time. That is our job. That is what we are here to do. And we really, really want you to hear that message and remember that. So with that, we'll conclude with own your wealth, make an impact, and always be a pro. We'll see you next time.
The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific individualized financial, legal, or tax advice to determine which strategies or investments may be suitable for you. Consult the appropriate qualified professional prior to making a final decision.